We're here on the Aussie dollar 60-minute time frame. I've got involved with a trend continuation trade. This is only going to be a one in, one out for me, and we've pulled right back up to our structure highs here. Let's just talk through this on the higher time frame. So if we put a structure level on at our structure lows, you can clearly see we've been bearish here. In the review video I did last night, I did say be very wary because anywhere in this zone there's lots and lots of buying pressure. So we want tight stops, or we want to be aggressive when moving to break even. Now here on the 240, right at this shelf just here, now it doesn't look like a structure shelf on the 240, but pay attention to this doji, and just below it, no, actually ignore that, but yeah, pay attention to that doji. Let's go down to the 60 where we can actually see our structure levels. I'm going to move this up to there. So this is the key level of structure. This is the main outside return for me. So anywhere within this outside return, I can look for a lower low, lower close. And right there you can see that we tapped the closes of the candles and we had a lower low, lower close candle. Now you can take these minor levels into consideration as the outside returns. In this instance, this is a little bit of judgment in terms of trend continuation. We've obviously violated those, but this is the main level. So that's what I'm paying attention to, and that's what I've used as the entry. So I'm just going to bring back on the orders, just an ATR above the high, which is just 10 pips here, and playing for a retest of the lows. I am not playing for an extension because we do have that daily time frame wick. So I'm not too sure how low price can go. What we also have is a harmonic move like this, and that is coming in a little bit lower than where we're looking at taking targets. So just looking at a one in, one out here. So we've talked about entries, stops, targets. We've got a positive reward to risk. Oh, one other thing, we did have the RSI confirmation as well. We did go overbought at 85. So this was a valid opportunity here. 22 of risk for a reward of 53. We're back for an update on this trade, and as you can see now, we've been having some nice directional moves. Currently 46 pips up. What can I say about this trade? I'll go to the 240 first of all and just show you this. Now, if I keep it there, when we looked at this, I said pay attention to this doji. Straight after it, we did get a nice lower low, lower close. We then did come up for a retest up at this level. Oops, get rid of that. Up at this level here. And then from there we have obviously been working our way lower. And trading is looking for areas where we think we're going to see a reaction. And from that reaction we can then build a case for entry, whether it be structure, fibs, patterns, psychological numbers, whatever it may be. We're always looking for that area that's going to give us the reaction. And that reaction time and time again happens at structure. That's why I'm a structure-based trader. Now what I'm going to do is, we've actually come here within how many? Let's have a look. 4 pips of my target. So I'm going to go ahead here and roll a couple of pips past break even, and simply just now going to leave this trade to hopefully go and hit. It does look as though we've got an advanced pattern here. I think no, we don't. I thought we had a back pattern. I was going to say I thought I checked that. So it's a case of just leaving this. This will be a lovely 53 pips on the Aussie dollar. And again, lower probability trade because we had that big wick on the dailies. But I had a better reward to risk, and I waited for extra confirmation. The lower low, lower close on the 60, the doji on the 240 being oversold. The RSI being overbought as well. So you know, it's a juggling game sometimes, because most trades, in fact there's not a perfect trade out there. There's no such thing as the perfect trade. Every single setup I have will be different. So it may be a good setup, it may be a very good setup, it may be an excellent setup, but each of those setups will have something wrong with them. So I can always make the case whether or not it is good enough to enter. And that's where experience and judgment comes into play. Let's hope this goes on for that 53 pips. And we're back on the Aussie dollar. Now I have taken this 2 pips early, just to let you know. We had gone massively oversold here. We'd double bottomed, held that level, and I just wanted to be a little bit cautious with this setup, and I'll just explain the reason why. Don't think I went over it in the first part of the video, but go back to the 60. Okay, we'd actually seen a retracement all the way back up to the very highs of our outside return. Okay, so if we'd come and turned at the lowest point, this was a strong sign that it was trend continuation to the downside. However, we didn't. We came right up to the very tops, showing that there's lots of bullish buying pressure, and as we came back down, we did put in a rejection candle there, and so I've taken it 2 pips early because we may not have come down to retest the very lows there. So out of that trade, very pleased for 51 pips.